Institutional capital is obsessed with the sky, while billions in venture funding pour into unproven electric vertical takeoff aircraft and speculative flying taxis. A quiet arbitrage is occurring on the ground. This focus on aerospace speculation ignores the immediate, profitable last-mile solution already navigating the streets below. Investors are looking past a highly efficient mobility asset that is currently solving the congestion problem at street level. That asset is the modern electric rickshaw and its Western iteration, the electric assist pedicab. To value this market correctly, analyze the rickshaw as a technologically adaptable, high-yield mobility platform. The investment thesis rests on three specific pillars. First, it generates premium yields in highly regulated Western luxury markets. Second, it dominates the zero-emission last-mile logistics sector with unmatched unit economics. Third, it provides the physical hardware foundation required for autonomous smart city integration. These three applications form a continuous, de-risked investment pipeline, moving from immediate profitability today towards scalable technological dominance. The evolution of this asset began with a foundational hardware upgrade, the integration of 500 to 750-watt electric assist motors and high-capacity lithium-ion batteries. This motorization eliminates the manual labor barrier. The vehicles can now operate in dense, hilly terrains and carry significantly heavier payloads without driver fatigue. By removing the physical strain of cycling, operators successfully shifted the business model from low-margin, high-volume transit to high-margin premium ecotourism. This data tracks the pricing structure of high-end tours in Western markets. Operators like Turtle in Paris and Big London command luxury price points, with private excursions ranging from $150 to over $450. These high margins are supported by exclusive business-to-consumer partnerships, with pedicabs providing curated sightseeing for luxury hotel chains like the Four Seasons. To capture this luxury demographic, the chassis design evolved to include hydraulic brakes, full weather protection, and sleek fiberglass bodies. But passenger fares are only one revenue stream. The physical vehicle chassis generates secondary business-to-business income. Brands utilize e-rickshaws as mobile ambient media. They function as zero-emission billboards and VIP event shuttles that infiltrate pedestrian-heavy zones during guerrilla marketing campaigns. These high yields are protected for early fleet operators through the introduction of strict municipal regulatory moats. Formalizing the industry required prolonged regulatory battles. Local governments eventually introduced licensing requirements, mandatory safety inspections, and commercial liability minimums. These regulations often culminate in hard caps on supply. New York City, for instance, restricts the market by capping the total number of registered pedicab medallion plates at exactly 840. This restriction on supply creates a geographic monopoly in dense tourist hubs like Central Park, shielding existing operators from external competition. Upgraded luxury hardware and government-enforced artificial scarcity combine to create a highly defensible, profitable fleet operation. The same electric chassis driving luxury tourism is now being applied to disrupt urban freight. Because the architecture is modular, a passenger cabin can be swapped out for a secure cargo box in minutes, converting the vehicle into a specialized last-mile logistics engine. This fits the avoid, shift, improve framework utilized by modern city planners for sustainable transport. This diagram outlines the strategy. The e-rickshaw satisfies the shift mandate by moving commercial transit away from light-duty fossil fuel vehicles and onto existing cycle path networks. It satisfies the improve mandate by eliminating tailpipe emissions and reducing urban noise pollution. Comparing the unit economics of the e-rickshaw to standard commercial delivery vans reveals a massive margin in both entry cost and daily operations. This bar chart tracks the total cost of ownership. The initial capital expenditure required to build a three-wheeled electric fleet is a fraction of the cost of acquiring heavy commercial vans. Operational expenditures are equally low. These vehicles have fewer moving parts, lower maintenance requirements, and charge on standard grids, avoiding the need for heavy-duty charging infrastructure. We see this clearly in dense European centers, where three-wheeled cargo variants are already deployed for efficient, narrow street logistics. Operationally, these vehicles maintain a speed advantage by utilizing cycle lanes to bypass car-centric gridlock, increasing their daily delivery volume. Modular design, low operational costs, and cycle lane access allow the e-rickshaw to reach cost parity faster than any other logistics vehicle. The terminal phase of this evolution is integration into fully autonomous ecosystems. This is currently being prototyped in Berlin's 100-meter Zukunft pilot project on Fasanenstrasse 100. Berlin has established a realistic urban environment to test the e-rickshaw platform's ultimate utility. Here, the human-driven electric assist pedicab transitions into an autonomous electric vehicle. Within this experimental microcosm, vehicles navigate dedicated cycle lanes and connect to solar-assisted docking hubs. The autonomous fleet operates on a 24/7 loop, capped at a maximum safe speed of 25 km per hour. Efficiency is maximized through dynamic switching. The chassis provides passenger transit during the day and autonomous freight delivery by night. Supporting this continuous operation requires a new type of physical infrastructure: wheeled humanoid robots. Instead of stationary charging cables, robotic assistants stationed at the hubs execute a battery swap in seconds, keeping the pods in constant motion. These robots also handle logistical handoffs, physically transferring packages from the autonomous rickshaws directly to recipients in restricted pedestrian zones. In their social integration role, they serve as multilingual cultural guides and language coaches, monitored by human smart city supervisors. Managing this complex physical coordination is an unseen digital backbone. This flowchart tracks the data logic. Real-time inputs from IoT traffic lights and environmental air quality sensors stream into a centralized AI routing node. The AI processes this information to dynamically reroute the autonomous pods away from congestion and immediate physical hazards. The final governance layer is a decentralized blockchain. Smart contracts log every battery swap, route adjustment, and delivery confirmation, ensuring absolute public transparency. In this terminal phase, the e-rickshaw functions as the physical hardware node of an automated smart city ecosystem. The data tracks a clear trajectory. The e-rickshaw operates as a versatile, capital-efficient platform for urban mobility. It is a single hardware solution that addresses multiple market inefficiencies. The business-to-consumer luxury pillar is already established, capturing high-margin consumer capital in defensible geographic hubs. The business-to-business logistics pillar provides massive scalability, driven by superior unit economics and a legal speed advantage over car traffic. And the autonomous infrastructure pillar establishes the hardware foundation for future AI-driven urban centers. For the institutional investor, capital allocated to smart micromobility offers immediate returns today, while securing a direct technological pipeline to the decentralized cities of tomorrow.